Guys, we are nowhere close to the bottom of the stock market. Jamie Dimon came out yesterday and said, hey, this market could go 20% lower. Jamie, I'm sorry, you're wrong. It's probably going to go lower than that. And I'm basing that on history and the three most reliable metrics in stock market history. The 10-year cyclically adjusted PE ratio. What that does is it takes the last 10 years of S&P earnings, brings them to today by bringing them with inflation dollars to today, and divides the stock market value by that. Historically, the average is 15 to 16. Where are we right now? We're at 29. Okay. So that says we need to fall about in half. Okay, that's one metric. Now keep in mind, studies have shown this has 85% correlation to the future 10-year returns in the market. Number two, the price to sales ratio. Historically, this is about 1. Where are we today? 2.4. Oh boy, needs to fall by more than half. Okay, that's another one. I get it. Maybe 2 in a row, just a coincidence. The final one is Warren Buffett's comment. It's called the Buffett indicator. He says at any given time, it is the most reliable metric on where valuations stand at that moment. And that is when you take the entire stock market GDP, market cap, and divide it by US GDP. Historically, you want it to be around 80%. We're currently at about 150% or so.
Oh boy.
Oh boy is right. That's another fall in half. So guys, we have 3 reliable metrics that have shown very high correlations to future returns. Let me show you exactly what I mean by that. So I'm just going to pull up the 10-year cyclically adjusted PE. Oh, we're at 27 right now on that one. So let's make this a little bit bigger and I'll show you where we stand. Okay, where have they been high? Black Tuesday. That's the stock market crash of 1928. 1966, right here. By the way, from 1966 to 1982, the S&P was flat, high net value. Okay, 2000 tech bubble. Look how that did. And then the COVID crash and today, much lower, much higher. Guys, this is just showing what we obviously know. Look at 1900 to 1920. Stocks went nowhere at that point too. So guys, it makes perfect sense. Think about it. The more you pay for an investment, the less money you're going to make in the long run. If I told you that a stock was going to generate $1, $2, $3, $4, $5 a year for the next 10 years, if you paid $10,000 for it, are you going to make more money or less money in terms of return than if you paid $1 for it? Very simple. The more money you make, the less your return. That's what this shows right here.
More money.
The more money you pay, the less your return. You paid a lot here, here, and here. And how are your returns going forward? It's so obvious, right? So that's what I sit there when I say, are we close to the bottom? No, because we just saw this COVID crash and then everything just skyrocketed. But you didn't see the corresponding fundamentals get better. You didn't see the stock market doubled, more than doubled. Did you see GDP more than double? No. Did you see earnings more than double? No. And that's the issue we have. I look at every investment as the present value of all future cash flow. That's the way you all should do that. If you're an investor, you shouldn't look at a stock as just a ticker going up and down. Look at it as buying a piece of a business. So when I see these things and I see where we stand today in the cycle, I get worried. I sit there and just say, hey, something's got to give. Now, does that mean the stocks are going to fall necessarily in half? Maybe not. But I will say this. When you look at stock market history and value, this is where stocks value go. But here's where stocks actually happen. The prices go. You're rarely at the actual value. We're either over or under. And at this moment, I think we're over. And at some point, we'll get under. But that going under will probably come from a couple of ways. One, prices dropping, because it's much easier for prices to drop. And the second way, which is fundamentals get better. Over the next 10 years, fundamentals will get better. GDP will grow. Earnings will grow. But there'll be a collaboration of those two. Prices will fall, fundamentals will get better. So it is possible that the S&P only drops to 2,300 and not 1,800. Correct. Because fundamentals get better. I don't know where it's going to go. No one can actually guess that. But what I will say is, I'm confident, based on history and where we stand today, that at some point over the next 10 years, we will have much lower prices than today. And I think that's more imminent today, based on where we are with psychology. Wouldn't you say that, Mo?
Yeah, absolutely. And if you look at this is going back to 2008. If you just draw this line, I mean, it's very slow. It's a very slow, steady thing. Then COVID happened, and then all of a sudden you got this. I mean, that just alone right there says, okay, something's off. Something's going to start correcting itself. Then you throw on top all the metrics that he just talked about, and you throw on top all of the supply chain issues that we're having, everything that's coming to fruition from COVID shutdown. Something's got to happen.
So take the valuation metrics. Mm-hmm. Those are important. but I also look at the feel out there.
Yeah.
When the psychology of the investing world, when I'm hearing a lot of young kids telling me I'm wrong on Tesla and Bitcoin, it makes me wonder, where are we?
High school kids.
Peter Lynch, one of the best investors ever, has his cocktail party theory. He says, when I go to a cocktail party, there are 3 things that can happen. If people are indifferent about what I do, they're like, oh, cool, you do that. Stocks are probably selling where they should be. If people are telling me what I should be buying, stocks are probably way too expensive and I should be selling. And if people feel bad for me for what I do, and they're like, man, I'm glad I'm not you, I probably should be buying. Look at that chart again. Look at this chart. This is where the valuations are the lowest. And valuations have to get low based on people's emotions. People have to want out of investing. But when I go and I hear people telling me, I can't believe you don't have this. I can't believe you don't own crypto. It's the future. I can't believe you don't own this stock that don't make money. I go, we're not there yet. We need to get to the point. In 2003, I remember I got a job. And I was sent to Dallas for training. And this was 2003. So remember, we just had the tech crash. We hadn't started going back up yet. This was June of 2003. And I was sitting in this training session. And there was a woman who was in my training session. And I was sitting there and she's talking about investing. And she goes, well, yeah, but like you can't invest in stocks. You're only going to get a 2 or 3 or 4% return if you do that. I didn't realize it then, but I realize it now. I remember looking at her going, you're crazy. And the guy made a joke saying, well, maybe if you invest with Paul, you'll get better returns. But she really believed that. That's what we need to get to. We need to get to the point where the average everyday person does not want to own stocks. Mo, do you love Apple?
Yes.
Do you love Apple at any price?
No.
But there are people out there who love Apple at any price. Yeah. And for us, our friend Michael once said Apple, and I added Tesla. These are the 2 stocks to me.
And I added ARK.
And you added, well, ARK has fallen so much already.
It has. But mine is ARK inflows, outflows. I want to see consistent outflows for a month.
I want to see Cathie Wood retire. I want to see Apple selling so cheap that people have given up on Apple. Yeah. I want to see Tesla so cheap that the story changes on Tesla from it's the best thing ever. And it will happen. It will happen where people are going to look at Tesla going, this is a garbage company. And at that point, if the numbers make sense, you're going to see me going, it's time to buy Tesla. Look at a company like Palantir. Palantir was selling for $30, $40 a share. I'm like, I'm avoiding this thing like the plague. I was ridiculed by that one idiot on his YouTube channel telling me I didn't get it. Palantir is now in the $7 range, and I'm interested in Palantir. Now, it's not a no-brainer to me because it's still not making money, but it just started generating cash flow, and the growth potential and the business fundamentals are getting a lot better. That's what we need on the overall market to get to where we need to go. How's that going to happen? It has to happen with a price drop. It has to weed people out. You have to get people saying, I effing hate stocks. Because at every single one of these levels, it's when people said, I hate stocks. This level was actually pretty decent. And I had friends of mine telling me, I'm worried about the stock market going to 0. And I was like, damn. Again, unfortunately, in 2008 and 2009, I didn't understand what that meant.
Yeah.
For me, I just sat there and said, that's just crazy talk. I didn't realize, hey, we could be close to the bottom.
Right.
I didn't know. I don't remember exactly when this person said it. I think it was a few months before the bottom. But the point is, you have to see people giving up. You have to see people giving up on Bitcoin, crypto, Tesla, Apple, the staples of what this new stock market and new asset world entailed. And that's the problem we have right now. We're not there yet. We still have people saying you buy the dip. Oh, stock is down 50%. That's fine. Buy it. You need to see people, these companies that have no fundamentals. Which companies don't have the fundamentals that back it? Basically go to ARK ETF and look at their top 20 companies. That's basically the garbage of the garbage over valuation. And I have no problem saying that. Timestamp that. October 11th, 2022 at 11:13 a.m. Eastern time, Paul said this. And I've never shied away from that. We have 1,800 videos here where I talk about this. But right now, we are not close to a bottom. Could we still go up from here? Absolutely. Definitely. You will see that happen in so many stock markets. So look at this is our software here. Let me put S&P. And I'm just going to go directly to our custom range. I'm going to go to 1999 to the crash of 2000. Look at this, guys. Here's what we had. We had a topping out that took a while, a drop, rebound. Oh, it's fine. A drop, oh boy, oh, rebound, and we're good. A drop, there we go. This is the real rebound. And then the fall. That's what has to happen. You don't just go straight down. You have to suck people back in.
That's what I like. Here it is. This is the peak right here. Fall.
This is
rebound.
recent.
This is recent. This is right now. Here was your peak. You got a fall and a big rebound, and everybody got so excited.
Well, you had to fall and rebound before then too.
Yeah, small. But I'm looking at the major ones here. Oh. But even look at them. I mean, yeah, look at these little rebounds that you have in here. But even let's just go with the big ones. Look at that. And here's going to be probably your next one's going to probably be somewhere in here where you're going to get that rebound and everybody's going to say, it's okay. It's okay. What it is.
And by the way, I don't necessarily believe that's going to happen, but a guy like Jim Rogers, he believes we have one more big surge up. I don't know. All I know is, all I feel right now, and based on where we stand today, I feel that the numbers show that we're going to have a lot further to go down. If you still have people believing in these hype stocks, we have a lot further to go down. The 2000.com crash said that to the T. You had to have people lose everything or a lot of money. And that's the unfortunate part. But guess what? We will get to better times. And your job is to dollar cost average and a low cost ETFs in the market month in, month out, and you will kill it long run. So if you're new to this channel, I've been teaching value investing for 10 years and the last 3 years on YouTube. But having a YouTube channel does not make me or anyone else an expert. But if you watch 4 or 5 more videos, you will walk away having a better understanding of money and investing. And even if you don't agree with everything Mo and I say, you'll walk away saying, wait, but these guys do have a process. And I don't want you to agree with everything we say, but you need to watch this next video on how to buy stocks during a volatile market. Thank you very much for your time.